Hello and welcome to today's Market Snapshot. My name's Craig Erlam, Senior Market Analyst at OANDA. Now we've got a really busy day in the markets today. I'm going to try and touch on everything quite quickly. We've got a lot of data out from the US. We've got CPI data which I think is going to be very important. Now, two things to note here. This isn't the preliminary release, so we're looking really for small revisions to the original data that we had out a week or two ago. We've got building permits and housing starts, got industrial production capacity utilization data, so plenty of data to come from the US. Sorry. We've also got the budget report from the UK. This is the annual budget from George Osborne. We're expecting more austerity. I think it's going to be interesting to see just how far he goes on the austerity front, though, because we've got the EU referendum, of course, coming up, and the last thing he wants to do is spook investors in the UK and worry people about the economic prospects at a time when we're facing such an important referendum on EU membership. He may want to push some of these cuts back towards the back end of the decade, which of course carries its risks in itself. But it'll just be interesting to see how he approaches this budget and how big the cuts actually are and what he offsets these cuts with. What you usually see from these budgets is they'll take from with one hand and they'll give with the other, of course, overemphasising the giving and underemphasising the taking away. But it'll be interesting to see again what kind of reaction we do get in the markets, particularly in things like the pound sterling. The FTSE, of course, is quite a globalised index that doesn't necessarily reflect the UK economy itself. It's the pound where I think we'll see the biggest impact, if we do see any impact at all. But of course, the biggest event today is going to be this Fed's monetary policy statement and the accompanying press conference and the economic projections. Now, what makes this so important really is that there's so much confusion still in the markets with relation to the Fed. Are they going to continue in the tightening cycle that they started back in December? Now, back in December, they said they were going to raise interest rates around 4 times this year. Now, people cast doubt on that quite quickly, and then we had all this economic turmoil or market turmoil back in January and early February, and people really cast doubt on their ability to continue to raise interest rates. Now, at times we've actually seen the markets, based on the Fed funds futures, have actually priced out any rate hike this year, and yet throughout this period the Fed continued to talk about raising interest rates this year. Now, today is going to be the first time we'll get some broad insight into what we can expect from the Federal Reserve in terms of the number of interest rate hikes. The market is starting to price them in again. We've got one priced in now for July. It's with around 56%, I think it is, based on Fed funds futures, and around 78% chance that we'll see a Fed rate hike this year. I think it's going to be very important today what the message we get from the Federal Reserve is. For one, are they still intending to raise interest rates 4 times this year? If not, how many they're now intending to? We've got the dot plot, which should support any statement that they make. But I think the most important thing today is going to be their communication strategy. We've seen on numerous occasions from a number of central banks now, most recently the ECB on Thursday. The ECB unleashed this massive bazooka stimulus program, and yet the communication is what was really the key driver shortly after it for the markets. Mario Draghi suggested that they're not considering further rate cuts, and despite the fact that we'd had this enormous stimulus package, the markets really reacted badly to this one statement. Now, I think the Fed's going to be very careful in what it says, but they've got a lot of information which they need to release to the markets, and they're obviously going to have the questions that accompany the press conference as well. So I think the Fed's got to be, Janet Yellen in particular, has got to be very careful with their communication strategy. But there's so much potential for a slip up that I think we could see quite a significant amount of market volatility around this event. There's a lot of information to the market for the markets to take in, and when you've got all this information to absorb, you can quite often see surges of volatility. Now, we've also got Japanese data later on this evening. We've got imports and exports data, some trade balance data, and some foreign investment as well. In terms of what the markets are doing right now, we are seeing a little bit of caution in the market so far. We've got equity indices. In the equity space, we've got the indices really treading water at the moment, similar to what we saw in Asia as well, and the US futures are really pointing in the same direction. In the currencies space, we are seeing the dollar again really benefiting today against the against most of the other currencies. We're seeing in the bond space, we're seeing European yields fall slightly again, partly probably a response to this big stimulus program last week, but also again reflecting that kind of caution and slight risk aversion that we've got in the markets as well. We've got commodities trading up primarily when we're looking at oil. So WTI crude is up around 2% at the moment. So like I said, we've got this kind of risk averse, cautious market, but we are seeing quite steady gains in crude, which is helping to lift some of the European indices. For more in-depth news and analysis, check out OANDA Market Pulse at marketpulse.com. You can also find out more about OANDA and sign up for a free demo account at oanda.com. Here you'll also get access to OANDA Forex Labs, which has a lot of great tools designed to help you with your trading.